There are two news stories that the media cannot get enough of running. The first is Magnificent Seven, insert some garbage statistic afterwards. And the second is, when is this fabled recession coming that we were all promised? This is the Wall Street Journal article that got me started on this morning. If you're unfamiliar with the Magnificent Seven, it's just the top 7 stocks in the S&P 500. And the article virtually everyone is running right now is that because they have been outperforming the rest of the index by so much that the stock market rally is unreliable, or the economy is in bad shape because of it. This is a story as old as time and is such garbage. It is nothing more than measurement bias and a few other things that we will talk about. So this article actually has some really great charts. Now they cherry picked the time frame, so I don't like these charts either, because they picked effectively when the real surge in the stock market started. They didn't look over a much longer time period, but it's showing that an equal weight S&P 500 and the normal way they measure the S&P 500, where each company gets a share of the return based on the size of the company. And then they also show it against the Russell 2000 versus the Magnificent Seven, that their returns have been fairly consistent. But let's go back to this idea around the fact that the top 7 are outperforming the rest of the S&P 500. Now, the S&P 500 is, the biggest, largest, whatever is U.S. companies. And I think people, because of that, they get the idea that like every company in the S&P 500 is like a rock star company. They are not. Don't quote me on this, but there's some statistic out there that like 40% of companies in the S&P 500 either go out of business, get bought out, or eventually fall out of the S&P 500. So like there's plenty of stinkers in the S&P 500. So in the top 5, 7, 10, 25, whatever you want, they are top performing stocks for a reason. They got that position because they earned it, right? So when you measure the top of an index against the entire index and then are shocked by the fact that they're outperforming the index, it is just math. It's just the simplest of math, that you're effectively measuring the bad ones versus the good ones. Obviously, they are outperforming. This is also such an of the moment thing. So I wanted to know, because all the news is about the 2023 returns. Magnificent Seven returned something like 97% last year, whereas the S&P 500 is only up like 24 or 25. So I looked for 2022 returns on the Magnificent Seven, article after article, but they were all written in the last couple of months for the most part. So then I selected, you can go through tools, and I selected articles that were written in 2022 to try and get something about the Magnificent Seven in 2022. The term came out recently, relatively recently, but this is what I got, right? There is a Seeking article down here. Right above it, it's this one, go-karting article, right? We've go-karting articles outrating 2022 returns for the Magnificent Seven. So I did the math. It was not hard. I just pulled up. They were down 47% in 2022, when the rest of the market was down, I don't know, peak to trough, S&P 500 was somewhere around 25%. So no one wants to talk about, yes, they were up 97%, but they also way underperformed the rest of the index in 2022. So they were down about 50%, up about 100%. If you understand the math of percentages, that means they're pretty much back to where they were. Just like the S&P 500, just like the NASDAQ, right? There's not a whole lot of news here. They went way down. They came way back better. They came back way better. Okay. This is an old chart. So this shows total weight of the largest stocks in the U.S. large cap index and their percentage by capitalization, right? And you see this spike here for 5, 10 and the largest stocks in the recent times. But you also see that it came down. It was relatively flat for the 80s and 90s. So why this big spike now? Is the 7 that we're looking at now an outlier? One reason it's outlier is if you ever ask someone, let's look at the top percentage of it, do they ever recommend the number 7? No, they recommend 5 or 10 or maybe 25, right? Not only are they cherry picking the best of the best, they're cherry picking the cutoff point, right? They picked 7 because below that, the numbers are not quite as sensational. If you do 10, not quite as sensational. You do 5, we can make a bigger, better hitting media headline with 7. So we're going to pick 7. The other is the trend that has happened over the world here, right? Back in the 80s and 90s, the companies in the S&P 500, they were starting to globalize, but for the most part, they're still US companies. However, over the last 10 to 15 years, the companies that make up this Magnificent Seven, they are global companies. They just happen to be traded on our stock exchanges because we're the biggest economy and it makes sense for them to do that, right? But every single one of those companies, they perform globally. They're not selling dishwashers in America. They're selling smartphones all over the world. They're selling digital services all over the world. We are now measuring global companies against the rest of the S&P 500, which is not all a bunch of global powerhouses. So of course the capitalization weighting is going to start getting skewed. We don't have an international company like stock exchange. They're all listed on our stock exchange. So now we're rating these companies that are in valuations in the trillions because they are doing business all over the world against regular old US companies, which was not the case back in the 80s, 90s, certainly not the 50s, 60s, and 70s, right? So it's this way that they're measuring it that is making this headline. It has nothing to do with something being way out of whack. All right, the recession. I want to cover this because the article also talks about it. It is down here where they're trying to predict recessions. First, this is another good one. How rate cuts have affected the market historically. So the question is, can we expect stocks to continue to climb after the Fed cuts interest rates? Well, here's the last 10 times they cut interest rates and the returns. One negative time, the rest positive. You can draw your own conclusions on that. Then they're talking about, is a recession coming? This is my favorite chart. If you're a fan of the channel, you have seen it before. This is the Philly Fed's recession probability index where they try and predict whether a recession is coming. Now, if you do the math on this, effectively there's about a 15% chance of a recession coming. If you just count the number of recessions that we had over the number of years. So I'll put a line for 15%. It's about right here. You can see they kind of have no clue when recessions are coming. I love the one that they have the best, like you would look before the recession occurs because the gray lines are the recessions and see, was there an elevated chance that they predicted that recession? And like the best one was the 2020 recession where it was actually pretty high here compared to the rest of the chart. Well, this was the COVID recession. You're telling me that in July of 2019, they predicted the global pandemic and that the world was going to be shutting down their economies? I don't buy it. I don't buy it. The rest of these, right? You look at, this is the dot-com crash way down. Are they a little elevated before 2028? Yeah, I guess so. They're like a couple of percentages higher. These are the people that have their pulse on the economy the best. They're terrible at predicting recessions. Everyone is terrible at predicting recessions. This is actually the exact same chart, just dressed up by the Wall Street Journal, right? This was back in July. Yeah, it was the end of 2024. And they were saying there's a 46% chance of a recession. You got to remember, this was the time when the Fed was announcing that they were going to be raising interest rates. This is like a baseball pitcher predicting that the next batter is going to get walked. You control it, right? The Fed was raising interest. They were actively driving the economy into a recession. And obviously, and the recession didn't even come, right? There's just so many influencing factors that determine recessions. I'm sorry, don't listen to anyone that tells you a recession is or is not going to come next year. The recession we've been predicting has been since the beginning of 2022. We are now in the third year of saying this recession is going to come. If it comes, it's going to be a different recession, right? It was 2.5 years ago that we were predicting these things. All right, this chart comes from an excellent thing from Morningstar, which I did an entire video on, kind of debunking the panic that was going on kind of third quarter of last year. That video is right here. It is excellent. It goes into kind of everything in this. Otherwise, I hope this has been informative, and I will talk to you soon.